You look at the concern about the U.S. economy. What do you worry about? Is it central bank independence, or is it actually some of the data kind of turning?
I think it depends on the horizon you're looking at. The central bank independence issue is certainly a very, very grave issue for the long term, for the sustainability of the U.S. recovery. I think more in the short term, yes, looking at the non-farm payrolls and what data we will see there, the weakening. I think trade wars is attracting a lot of the attention away from the underlying economic performance of the U.S. economy. It's also about the currency wars, the investment wars, the blocking of Chinese investment into the U.S. that is also affecting other investors into the U.S. because when you have foreign investment screening rules, they cannot be applied just to China. So, say, Australian public asset owners that want to invest in the U.S. are also affected by this. And I think that is quite important and is being missed because all the attention is on the trade wars. But the Fed independence issue is quite concerning, and it's setting a trend also for politicization of central banks, for lowering of the barriers between central banks and politicians in other parts of the world. And if that becomes a trend, that could be a big worry in terms of economic stability.
But overall, if you didn't have the trade war, would the U.S. economy actually warrant lower rates? Probably no.
Yes, it's the data dependence of the Fed, but the way the economy is reacting is affected by the trade wars, by the tariffs. So it's interlinked.